Hi there, and great to have your company on Kalkine TV. I'm Rose Jacobs and you're watching Buzzing Trends. Today we'll be looking at three ASX 200 stocks with highest gains in February so far. The Australian share market didn't have a good start to the year in 2022. The benchmark ASX 200 index took a heavy beating in the month of January, in sync with the global markets on account of concerns over aggressive interest rates hikes this year. However, February of 2022 seems to be a better month, giving investors some relief. The ASX 200 has delivered a positive return of 3.08% so far this month. In the midst of ongoing recovery, some top ASX shares have massively outperformed the benchmark index. Let's have a look at three top shares from the biggest of the ASX 200 companies, which have performed the best in February so far. The top performing ASX 200 stocks for the month of Feb have been filtered from the top 50 ASX 200 companies in terms of market capitalisation. First up, Qantas Airways is the flag carrier of Australia and its largest airline by fleet size, international flights and international destinations. Qantas has been the top gaining stock so far this month. It is one of the most popular airlines in Australia, having operations in over 23 countries. The company has a market capitalisation of $10.35 million Australian. Qantas Airways share price has rallied over 14% in February so far to its current trading price of $5.54. The major boost for the rally has come from Australian Prime Minister ScoMo's statement on the reopening of Australian borders for international tourists from the 21st of February, which has created a buying frenzy for ASX travel shares. Next up, Fortescue Metals is one of the largest Australian miners, having a market capitalisation of $68.4 billion. Its shares are in a consistent uptrend since November last year, when it bottomed at a 52-week low of 13.90. A gain in iron ore prices from November has been the primary contributor for FMG shares' uptrend. In February, Fortescue Metals has delivered a good return of over 10% so far to the current trading price of $22.50. Today, its shares rallied to the highest level of the year, gaining 13.35% after China called for faster infrastructure construction, which sent investors on a buying spree for iron ore miners. The last stock on our list, Sydney-headquartered QBE Insurance, is a general insurance and reinsurance company, having a market capitalisation of $18.26 billion Australian. Financial year 20 turned out to be a tough year for the company, as it reported a net loss of $1.52 billion compared to a net profit of $0.55 billion. QBE Insurance shares have sharply recovered from the year's low of $10.75 marked on 27th of Jan 22 and are up 11% in February, with the current trading price being $12.51. Last week, the company became a member of the United Nations-convened Net Zero Insurance Alliance, which aims to transition insurance and reinsurance underwriting portfolios to net zero greenhouse emissions. Though these double-digit returns in a span of a few days might seem lucrative, investors need to approach investing with more realistic expectations. Generally, blue-chip companies are not suitable for short-term quick gains, but rather long-term steady gains. Therefore, not getting carried away with short-term gains and staying invested till the analysis calls for an exit is the best investing approach. But that's it for now. We'll be back soon with our Buzzing Trends show to share the latest market insights with you. Till then, be sure to stay tuned with Kalkine TV for more stock, business and economy related hot trends.